Yo, QC Lee here, back and better with some more free game for you all today. Now, have you ever wanted to make hundreds, thousands, and potentially tens of thousands of dollars from trading, all while using a geometrical pattern even a third grader could comprehend? Now, if the answer is yes, this video is for you. I'm going to be going over the best and highest probability chart patterns and exactly how to use them. Now, everybody and their mama can give you all the chart patterns. There's a bunch of videos on all the chart patterns, because there's a bunch of them out there, but not everybody is going to tell you which ones are the best, which one are the most probable, and which ones are going to show up the most in your trading. Now, without further ado, let's go ahead and get into it. Now, for the first one that we're going to zoom in and use, it's going to be called the bull flag, okay? And I'll throw it up on the screen so you all can know. But what does it look like? It looks like what it is. You know, chart patterns are not, trying to misguide you. It's not a trick question. It is what it is. If it's named what it is, it's probably going to look exactly like the name. Now, a bull flag. Here's the pole, and here's the flag, as you can see. Now, I'll throw it up on the screen or something right here. Now, so with bull flags, once you see it forming and trending into this, the highest probability play that you can play from a bull flag is the breakout, okay? If it breaks out like this, you know it's going to go a little bit higher. This one didn't go very far. But if you get a little friskier, you could play the bounce. You could play all this price action in here. Now, I know it doesn't look the best to you, but if you're a scalper or if you're a day trader, this is like heaven to you. You could make, 5-6 trades in this matter of like an hour here. So you can ride it in the middle, up, down, up, down, up, down, whatever. Personally, I actually played the bounce off of this right here all the way up to just about right here. It was a quick about 40-45% on the 0 DTE SPY contract. And again, that's good profit. So bull flag is where it rides up like this, and then here's the flag. The pole right here, the flag is right here. There's different ways to play these things. And also remember, you cannot use just one thing to enter a trade. A wise man once told me, one reason is never enough to enter a trade. And oh boy, was he right, okay? You got to combine this stuff with other high probability factors in your trades. You want confluence. So for this trade, we saw a little bounce off VWAP right here, okay? And then once we saw this bounce, and my stop loss was like outside of this flag. So if it had came out of that flag, I would have just stopped out for, max 10% loss. So we see a little bounce off VWAP. We see some decent green volume on this confirmation candle breaking out of the bull flag. And then we see a break and hold temporarily over that 8 EMA. So we have a few things here. It was a decent trade. Now, without further ado, let's go ahead and find the opposite. Now that we've covered a bull flag, it's time for us to cover a bear flag. As you can imagine, it ain't different than the bull flag here. Let's zoom in one more just so y'all can get this real image here. Now, it's not going to be very different than the bull flag. It's going to be inverse. Now, I'll throw it up a picture right here or something. Now, bear flag is the exact inverse of a bull flag, and you can play them to the exact inverse way that you would play a bull flag. Now, let me go ahead and explain what is what. Now, this is an upside down bull flag. This is the pole. This is the flag, okay? Now, we see that price action is trending in between this as it's going up, basically. And now, the highest probability way you can play bear flags, guess. I just told you bull flags, so you should be able to guess the highest probability way to play a bear flag. Yes, it is the breakout of the bear flag, okay? So in this particular thing, we can see this breakout candle right here. Some decent volume, it's not that much. But then, while we have that breakout of that candle here, we have a cross under that 8 EMA. So we have two factors right here, some decent volume, and then we get a little one, a little bit less volume here, and then we get the crazy volume. So what I would do, and we get a rejection of VWAP right here. So we have three things. If you really wanted to be frisky, if you were trading aggressively, scalper, day trader, whatever you want to do with this, you could have taken this bounce off of VWAP and rode it and once it crossed under that 8 EMA, you could have been even more in business, and then you could just hold all the way down to the next support or resistance, or until it crosses back up or shows, a loss of momentum, some green candles. Either way, this is a textbook amazing bear flag trade, okay? Once again, the pole, the flag, the highest probability way to play this is the breakout, okay? And remember, you always want to wait for confirmation. If you don't know what confirmation is, go back to my videos. I teach all this stuff, baby. Now, again, we could do it here if you want to be more aggressive, or if you're less aggressive, you can go ahead and wait for the breakout. Either or, not that much difference. You're going to make a lot of money on this trade, baby. Now, that's how you use bull flags and bear flags. Those are some of the highest probability chart patterns on the market that I use. And again, I will never teach you guys anything that I don't personally use or don't have experience with. So when you're getting it from me, you guys are getting it from me, actually me, because I'm doing it, man. Now, let's go ahead and zoom out so we can see the next high probability pattern. Now, bull and bear flags are really good, but I promise this one I think will resonate with a little bit more of you guys. Now, if I'm doing good, if you guys are liking this content, if you learned something already, give me a like, give me a comment, and if you're really feeling good about me, man, give me a subscribe. I would appreciate it. We put all these videos out for free. We've covered at least 5 to 6 different strategies already, all for free. And I've had a lot of people tell me they've made money off these videos. So if you would be so kind to give me a like or a subscribe, it would be highly appreciated. Now, this is going to be a double bottom chart pattern, okay? This is also a high probability chart pattern that I use and my whole team uses. Now, a double bottom and a double top, these are reversal patterns, okay? So when you see these patterns, see, look, one bottom, two bottom, double bottom, hence the name. This indicates a reversal pattern. Now, there are a few ways you can play this. Now, this right here is going to be called the neckline. This is the neckline. Now, if you are the most risk-adverse trader out there, okay, the highest probability way you can play this is when the break is to play the break of the neckline, okay? So once it gets past this point, once you get a 5-minute candle close over the neckline, and I'll put it up right here, what exactly the neckline is on the double bottom pattern, that's when you can enter longs, when you can enter calls and go ahead and go up and ride it up to that next support, which is going to be just about right there. As we see, it wicked perfectly off that. So this is a textbook trade once again. But I told you, you can't always use just one thing. Now, or you could wait until we get that cross over this EMA. I'm sure if I turn my 21 EMA on, we probably got an EMA cross here. Yep, we did. Look at that. So EMA cross right here. In fact, the EMA cross is right at the neckline. So it happened right before that. So you see that 8 EMA cross above that 21 EMA, and you see the cross of the neckline, and you have a double bottom pattern here. 3 high probability factors to take that trade long and ride it all the way up to that next support or resistance, baby. Done. Now, I hope you guys learned exactly how this works. This is a textbook amazing trade for a double bottom trade. Now, let's go ahead and switch that EMA 21 back off. And now we're going to show you guys, what is it? The double top, the inverse. Now, I want to make sure you guys understand fully how to trade both of these things. See, it looks a little funny here, but we're going to take care of that. There we go. We'll go ahead and take this out so you all can see better. Now, what did we go through last time? The double bottom. Now, what are we doing this time? The double top, baby. Now, clearly you guys can see one top, two top, double top. None of these patterns are going to try and, these aren't misleading names. There's some things that are a bit misleading in trading, but this is not one of those things. So take it as it is. It's very straightforward. Now, how did I tell you guys what is the highest probability way to play double tops and double bottoms? Remember, they are reversal patterns. Now, I said to wait for confirmation at the what? The neckline. The neckline is right here, okay? So, for confirmation, you would wait till you get a 5-minute close below this neckline. Excuse me. Now, once you got that 5-minute close, you could enter puts and write it all the way down to here. Now, you could write it down to VWAP. VWAP is a great place to trim, sell. VWAP can be a price target for you always. It's volume weighted average price. If you don't know how to use these EMAs or these VWAP, go back to my last video. I got a bunch of info on explaining it, and I explain it fully there, y'all. You can't miss this free game. Now, we see it go down the VWAP. It wicks, it wicks, it wicks. You could sell here if you're really aggressive and really smart, or you could just sell anywhere in between here, once you enter from right here. And what is this? 436 down to about, this is 436.85 down to 436.2. That's some good money, regardless if you're scalping or what you're playing. And remember, guys, before I'm going to go ahead and say something. These chart patterns are valid on every single time frame. So far, up to this entire video, I've showed you chart patterns on the 5-minute. On every single one has been on spot and on the 5-minute. Now, I'm going to go into more in the later on in this video, but I just want to make it very clear that you can use these on the 5-minute, the daily, the 1 hour, the weekly, the 4 hour. You can use these on any time frame. So don't feel like it's just limited to day trading or just limited to scalping because I'm on the 5-minute time frame. I'm doing this because I take my entries on the 5-minute and I want to be consistent so you guys don't get confused. Now, anyway, back to our double top pattern. You guys know how to play it. Here's the neckline. I'll throw up another picture right here. Here's the neckline. You get a clean break, a 5-minute close of the neckline, and then you take it down. You write it down, 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 down. And once you touch VWAP right here, you could just trim or sell, and then you see that reversal back up. Now, that's a pretty decent example of a double top pattern here. Now that we've learned bull flags, bear flags, double tops, and double bottoms, I just want to go ahead and congratulate you for making it this far in the video. You're about halfway through, but if you think you've learned something now, you better stay till the end because you're about to learn a lot more. Now, the next pattern, let's get to it. Let's go ahead and go to Starbucks, the stock. In fact, I just hit some crazy good puts on this stock. And if you're not in my private Instagram channel, I will put the link in the description of this video. I called this trade for free, yes, for free, in my private Instagram broadcast channel. So I'll drop the link below, and if you're not in there, you're really missing out on free game. I give out giveaways, exclusive updates, I trade ideas. I just give away free money in there. So if you're not in there, please do yourself a favor and tap the link and get in there. Now, anyway, back to it. Now, this is what we call a descending triangle. It is exactly what it looks like. I'll throw up an image again right here. No need for all that. Now, it's exactly what it looks like. But this was such a textbook, amazing breakout trade. Now, for descending triangles, these are going to break out either one way or the other. It could have broken out on the downside here, okay? It could have broken out down here. But this one luckily broke up. It could have broken out down here, but it broke up. So whatever way that this descending triangle breaks out, you want to play that way. If it breaks out up, play calls. If it breaks out below, play puts. Don't fight the trend, okay? Once you get a breakout like this is liquidity gathering itself up, okay? This is price action. This is liquidity gathering, okay? These are orders filling, a bunch of orders filling, a bunch of orders going in, and then all these orders get filled or whatever, and there's a breakout. So you don't want to fight the trend as soon as it breaks out. If it breaks out up, play calls. If it breaks out, below, play puts. So anyway, here's what I sent in my Instagram broadcast channel. So we see this descending triangle. Now the highest probability way to play these is to play the break up or the break down. And these are some of the highest descending and ascending triangles, which I'm about to get into in 1 second. These are some of the highest probability chart patterns on the market. I've seen these nearly on every stock that I've traded for the past maybe year or so. They're super common. And I've made tens of thousands of these from just this year. Yes, tens of thousands just this year from these right here. Now, so we see the breakout in the 5-minute. The 5-minute confirmation candle of the breakout of the ascending triangle, okay? Now, they have to have flat bottoms, or the descending triangle. They have to have flat bottoms, and it has to be a triangle. So once it breaks out, you can play calls. Now, this was perfect. This went just straight up after. It was like an amazing trade. We hit the bank. But remember I told you, you can't just use chart patterns by themselves. One reason is never enough to get in a trade. Now, what else did I use to call this play in my Instagram private channel? Now, number one, we have the breakout of the descending triangle, okay? Number two, this right here is a crossover, well, price action. Let me be very, very, very specific here. Price action crossed above the 8 EMA here, and price action is just barely crossing above VWAP here. So I said as soon as we get this candle right here, that one closed, I entered right here, and then we just rode this baby up. And now this is the next support right here. Obviously, look, we have confluence here. Oh, don't freeze on me now. Don't freeze on me now. There we go. Now, we have confluence here. We got confluence there. Confluence here. I saw at about this level. And let's go ahead and just trash this to give you guys a better look. But that's where I sold. Sent the exact play and directions to my Instagram broadcast channel. 3 good factors helping us get into the play. Oh, 3. Did I say 3? I meant 4. Look at this volume down here on that confirmation breakout candle. Huge volume. 4 factors, okay? Now, this is what trading is all about. You got to wait for these high probability plays and confluence to come to you. You can't be out here trying to take trades every day and thinking it's going to work. Be patient. Trading is 80% waiting and 20% execution, baby. Now, I hope you learned how to play a descending triangle because this was perfect. Now, without further ado, let's go over to the what? Guess what? Ascending triangle. Now, the ascending triangle is going to be the exact opposite, as you can imagine. So far we've done bull flags, bear flags, double bottoms, double tops, descending triangles, and now we're on ascending triangles. Now, if you get the point, you can skip it until the next one. You don't want to miss the next one. It's going to be important. I have 2 more left after this, and they are extremely important also. So if you get the point, I'm about to just explain that you do this the same thing, but inverse as you would for a descending triangle. This is an ascending triangle. Now, anyway, ascending triangle right here on AMD. Textbook movement right here. Now, again, the highest probability way to trade an ascending or descending triangle is the breakout. Whether it is up or whether it is down, that is the highest probability way to play these chart patterns. Now, I told you it could break up or down. The last one broke up. Now, this one broke down. So, as soon as this goes down, as soon as we get that 5-minute breakout, as soon as we get that confirmation, baby, we can enter those puts. So, we see here, or if you're more frisky, you can take this off of this, kind of pin bar candle right here and get yourself an extra 10, 20% profit. But now, I told you that you can't just use one thing, so now I'm going to back it up. All right, so a red candle right here. We get that confirmation candle with that 5-minute breakout. Not only that, but we get the breakout of the ascending triangle. We also get the EMA cross. We get this EMA, the 8 EMA, crossing below the 21 EMA, telling us that we have even more bearish price action on the verge, baby. So, 2 or 3 good factors here. There's some decent volume. It's not crazy, but we went down to test VWAP right here. Once we broke VWAP, we stayed under this 8 EMA, which is a good sign, so we could go ahead and sell at that next support or resistance. Now, this is a little bit of a level here, tad bit trickier, but you should be trimming as you go down anyway. Now, without further ado, on to the next, baby. Now, all right, this is what I call a pennant. Okay, this is a pennant, and now these can go either way. Now, a pennant is just going to be, I'll show you a picture right here. We'll put that thing up there. It's exactly what it looks like. It's just a pennant. Okay, it's for price action. It's just kind of staggering, getting more narrow and more narrow as you go, as time goes on. Now, these can break out either way, up or down. Remember, you want to play whatever way it breaks out. Don't fight the trend. Now, if it breaks out up, play calls. If it breaks out down, play puts. Now, here we go. This one, you see it coming in, smaller and smaller, more narrow price action. I would not recommend playing the price action for inside the pennants, just to be very honest with you. This is too choppy. Maybe right here if you're a really good scalper, but I don't recommend playing this. This is something that I don't even do myself, so of course I'm not going to tell you guys to do it too. Anyway, so as we can see here, as soon as we get this break, this one was fast, aggressive, and it made us money, baby. As soon as it breaks out of this pennant, we gap down, or not gap down, we shoot down a huge bit, huge volume. So as soon as we got this candle, I would have been in. Like huge volume, and then we can just write it back down to the next support or resistance right here. So I probably would have sold around here, just to be safe, or at least trimmed, but we got even more action down here. As long as it price action stayed below that 8 EMA, I probably would have been all right. So yeah, so pennants are really cool. These tend to appear a little bit less on the market than like ascending or descending triangles, but they're still really good, and you need to know them. You need to know how to play them, because when you see them, you don't want to miss that opportunity. It's free money if you compare it, or if you combine it, I mean, with other high probability factors. Now, without further ado, let's move on to the last one. Now, for this last candle pattern, I personally don't use this that much, but my team does. I've used it, a decent bit the past few months, and it's made me money, so I gotta put it in here. I couldn't leave it out for you guys. So, head and shoulders, okay? Now, this is an inverse head and shoulders on the daily chart on Tesla. This was recent, in fact, so I'll throw it up right here to give you guys a good view of it. But if you can't see it already, this is an inverse head and shoulders. I'm only going to be covering the inverse of this. The head and shoulders normal pattern is just this, but just flipped around. Hence, I say inverse. Now, here's the left shoulder. Here's the head. Here's the right shoulder. And here is the neckline. Just about right there is the neckline, okay? Now, the highest probability way to play a head and shoulders or an inverse head and shoulders is to play the breakout of the neckline. Now, head and shoulders and inverse head and shoulders are also reversal chart patterns. So when you see these, expect a reversal, okay? Now, once it gets through the neckline, once it closes above the neckline, like this candle just barely did, you can expect more upwards or downwards movement, whichever way it's breaking out. In this case, upwards. In fact, one of my analysts actually played this, and we made some bank. The whole fam actually made some bank on this, actually. He explained that it was an inverse HNS, stands for head and shoulders. So once you see that, you can see that we gapped up instantly. As soon as we broke that neckline on Tesla, we instantly gapped up. We went from what, like 206 to all the way to like 220, like overnight, like dude, in one day. Like, so this is the real deal. So you can use this for swing trading too. Remember, I said that you don't have to be limited to day trading or scalping on these 5-minute charts. These patterns work on every single chart pattern. Now, look, another example. Look, more free game for you guys. This is a pennant right here. You should know this. This is a pennant right here, okay? And now, when we got the breakout of the pennant, in fact, it was so fast on the daily, we gapped up. We went all the way from, 256 to 275. I promise you guys, if you use these on these higher time frames, it's going to help you click. It's going to help things click for you. Like, just make sure you know these and make sure you're looking for these patterns as you're trading. Now, don't force them, okay? These patterns aren't always going to be perfect, but combine them with other things in your trading and just watch your success grow. Like, it's so evident. Now, I've got a lot more to teach you guys, but I'm going to have to save that for the next video. This video is long enough. So if you learned something, give me a comment. If you liked it, give me a like. And if you want to see more like this, go ahead and hit that subscribe button. So I hope you've learned the best and highest probability chart patterns to use in your trading and exactly how to use them. Now, without further ado, I'm QC Lee with the Motivated Trading Company, and that's it from me today. God bless you.